If you're saying to yourself, I don't know if I'm ready to start private equity interviews, this video will give you a definite answer. I'm going to show you exactly what ready looks like, clear benchmarks, quick tests you can do tonight, and how to close gaps fast. By the end of this video, you know whether you interview ready or if you need more time to prepare properly. I'm Stefan, co-founder of Break Into PE, ex-Morgan Stanley and ex-HG Capital. We've helped candidates land roles at top funds across Europe, like KKR, Blackstone and Bain Capital. So here's what ready means in private equity recruiting. You can build and explain an LBO from memory, including common variations. You understand the PE firm you're interviewing with, who the leadership is, how big their latest fund is, their geographic strategy and investment philosophy, and at least 3 of their portfolio companies in detail. Besides this, you've prepared your CV, your equity story, and your work or deal experience so it comes out crisply in both 30 seconds and 2 minutes. You've run mock interviews, your technicals and valuation are strong, your communication style is investor ready, logical, structured, answer first, your mental math is solid, and you have a sector and a company you can pitch like a real investor. That's the bar. Now let's make it concrete. Let's start with LBO mastery. If you're interview ready, you can build a clean LBO from a blank sheet on a timer without notes. You can set up sources and uses, debt tranches, fees, working capital, taxes, and the cash sweep. You can run sensitivities on leverage, entry and exit multiple, and growth. And you can handle the common variations, a PIK toggle, a delayed draw term loan, a seller note, a dividend recap, all of that. Test yourself tonight. Set a 60-minute timer and build a plain vanilla LBO from scratch. If you finish on time and the model ties, you're in the green zone. If you stall, if you're copy-pasting old files, or if you can't explain why IRR moves when you take leverage down by half a turn, you're not ready yet. Take a week to focus on it and properly practice to fix it. It's fixable. Next, know the fund cold. Before you walk into an interview, you should be able to say, without looking at notes, who leads the fund, which sectors and geographies they target, whether they prefer control or minority, typical check size, the size and vintage of the latest fund, and how they describe their investment philosophy. You also need 3 portfolio companies you can speak to in detail. For each one, explain the deal situation, including who the involved parties are and what the likely investment thesis is, as well as which value creation levers are realistic over the next 3 years, and a directional exit path. Build a one-pager for each target fund and rehearse it out loud until you can deliver the key points in under 2 minutes. This is not trivia, it's showing respect for the firm and thinking like an owner in their world. Now your story, 30 seconds and 2 minutes. Your intro often decides the interview in the first minute. So here's exactly how to deliver it. In 30 seconds, hit 3 beats, 1 sentence each. Where you're from, what you did before, and what you're doing right now. Make sure to also add something personal to make you human and memorable. Like for example, that you like fishing and try to go every Sunday morning. Or that you're a passionate tennis player and competed internationally during your adolescence. Keep it crisp and drop the fluff. Avoid extensive biographies and vague language and generic terms like top-tier firm. Make it quantifiable and specific where possible. For example, I'm a second-year analyst at Goldman Sachs in a TMT team. I've been working on 4 deals that closed, 2 buy sides and 2 sell sides. For the 2-minute version, keep a tight spine. Here you can add a bit more detail to the 30-second version. Where did you study? What kind of deals were the ones you closed? When speaking about your involvement, make sure to be able to articulate measurable results. State the situation, your action and the outcome. Many candidates make the mistake and already speak about why they want to go into private equity and list all of the reasons why they want to join a particular fund they're interviewing. When they only ask you to introduce yourself, stay disciplined and keep it short. They will most likely ask these questions like why private equity, why this fund, and why you anyways later in the interview. So instead of just preempting those and talking too much, keep it short and sweet. However, make sure you have these questions and the answers prepared. Use the 3 rule. That means have 3 arguments prepared for each question. So if someone asks why private equity, you can respond for 3 reasons and then name the 3 reasons. That makes you come across as much more structured. Now let's talk real-life interview prep. Mock interviews are non-negotiable. You haven't done at least 2 or 3 mocks before your first real process, You're leaving too much to chance. You want to test 3 things under pressure. Your ability to think commercially when the conversation goes off script, and your ability to speak answer first, headline, and then 2 or 3 reasons and the implications. Ideally, you can work with us at Break Into PE. If not, see if you can get friends who already work in private equity and are willing to help. I don't advise asking other banking or consulting friends since they haven't mastered the process themselves, and therefore the preparation may actually be counterproductive. Next, let's talk technicals and valuation. Depth over trivia. You don't need to be a walking textbook, but you must be strong where it matters. You should be able to explain different valuation methodologies and really understand what the considerations and underlying assumptions are. Then technical details like unlevered versus levered free cash flow, accounting intricacies for things like pensions, as well as outline paper LBO and understand all variations and considerations. Make sure to also have views on typical assumptions. For example, if you're asked why the exit multiple might differ from the entry multiple, don't guess, but have a thoughtful view. Start with a base case and assume no re-rating unless there's evidence. Then cover what could expand and contract the multiple. For expansion, it could be, for example, a combination of shifting to higher quality or more recurring revenue, achieving real scale and market leadership, and improving ROIC in a way that's durable, not just cost cutting. Next, cover what could compress. Tougher competition, pricing pressure, growth slowing or becoming more cyclical, and a high cost of capital. Cite the evidence you'd monitor: net revenue retention, gross margin trajectory, win rates, customer concentration, churn, and more. State your stance. Exit equals entry, and what would change your view and by roughly how much. Tie it back to the value creation plan only if levers like pricing, utilization, or tuck-ins generally improve quality and durability. Finish with sensitivity discipline. Show IRR and MOIC across a reasonable multiple range and never rely on multiple expansion to make the case. In fact, it's more common to even assume a slight multiple contraction at exit. Investor communication matters as much as the math. Private equity isn't just numbers. It's how you think and persuade. Lead with the answers, then give 3 reasons, then the implication or next step. Keep the tone calm, logical, and decisive. If someone asks for the top risks in a roll-up of B2B services, for example, lead with integration complexity, potential churn if you cut too fast, and the risk of overpaying for add-ons, and give a practical mitigation for each. That's the style. Next, mental math is critical. Candidates underestimate this, but if you freeze on a basic CAGR margin or payback calculation, it breaks the flow. You want fast, verbal arithmetic, approximate CAGR, percent of percent changes, contribution margin, break even, leverage ratios, coverage. And you want to narrate your math so the interviewer can follow. Practice for 50 minutes a day. We recommend using a mental math app for your phone. That way you can stay sharp and practice on the go. There's a couple of ones that I could recommend. We've seen candidates not pass because of mental math, and candidates get offers because of convincing mental math. So don't underestimate it. Next up, company pitch. Have a sector and a specific company you can pitch. This proves you think like an investor, not just a modeler. Pick one sector you genuinely like, define its boundaries and drivers, and explain why now. Set clear filters: size, margin, growth, CapEx intensity, customer concentration, regulatory exposure. Then pick one company and deliver a 90-second pitch. What the business does, the basic economics, 3 value creation levers, 3 key risks, and a simple path to an owner-worthy return. Keep it directional. Show a point of view tied to levers and risk, consistent with how an owner behaves. Let's tighten your equity story. Why private equity, why this fund, and why you? For why private equity, talk about owning outcomes over multiple years, using a technical and commercial toolkit to compound value, not just complete a transaction or slide deck. For why this fund, make it specific. Reference their investment strategy, their portfolio, and how they create value, and link that to your experience. For why you, be precise about what you offer versus other candidates. Maybe deep exposure to vertical, having run point on key work streams that are of particular relevance to the fund strategy, or a curated pipeline of targets you want to diligence. It's not about being perfect. It's about being directional and useful on day one. If you're hearing this and thinking, I have holes, good. That's the point. Find them and fix them. If your LBO is weak, spend 3 days rebuilding from scratch twice. No templates, then add one variation like a pick tranche or dividend recap. Time yourself and start building in variations. If fund knowledge is weak, take 2 evenings to build the one-pager and rehearse it out loud. If your story rambles, write it, record it, and cut 20% of the words. No fluff. If mental math is shaky, do 15-minute drills daily for a week and speak your math out loud. If you've done 0 mocks, schedule them now and ask for blunt feedback on clarity, structure, and speed. You're ready to start processes when 3 things are true. First, on a timer, you can build a clean LBO and talk through the moving parts calmly. Second, you can speak about the fund and 3 of their portfolio companies without notes, and you sound like an investor. Thesis, levers, risks, and a plausible exit path. Third, your story lands in both formats, a crisp 30 seconds and a natural 2 minutes, and you can deliver a simple company pitch in 90 seconds with confidence. If those are true, go. If one of those isn't true, give yourself time to fix it. Don't burn a good process because you were too early. If you want to master these elements and practice with brutally honest mock interviews that have helped your peers land offers, book a free consultation at breakintopE.com. We'll tell you straight whether you're ready, and if not, exactly what to fix and in what order. I'm Stefan from Break Into PE. If this was helpful, subscribe for more, and I see you in the next one.